is currently with Strategy & which my understanding is a consulting company that was originally Booz & Company, and a long-standing consulting company that was fairly recently bought up by PwC, so part of the PwC house. Edward has considerable experience working in the region with PwC and with Booz, and he's an expert on civil aviation, I understand. And the value chains involved in that. He's got over 2.5 decades of experience working with governments on designing economic policy, working on transport, and working on a lot of these other areas. So we're very happy to have him here. He's based locally in Kuala Lumpur. He has brought with him a colleague who is normally based in Brazil, Ivan de Souza, there at the end of the table. And Ivan is a managing director of global markets and a senior vice president for PwC. I'm not sure whether it's PwC or Strategy & but Strategy & so I originally wanted Ivan to talk about the upcoming World Cup football that will take place in Brazil, but he's declined that. He's not an expert on the football value chain, but I understand he'll chip in a few remarks, and then maybe during dinner or afterwards you can ask him about the football. I understand he's got tickets to 5 games, so you might want to make friends with him. But I'll hand over to Edward now. Thank you.
Thank you very much. Okay. Maybe Ivan can use that when the time comes. Okay, hi. So I seem to stand here just like Anna's with this screen right above my head, looking as if it's just about to descend, so I shouldn't jump up and down too much. This afternoon, I heard this morning, had a somewhat academic session. I can promise you that I'm not an academic. I did scrape through 2 degrees, but I'm basically a practitioner as a management consultant, and so what I'm going to be doing is giving you some perspectives from, I suppose, the way we see things, dealing with our clients around the world, and the way that we actually like to shift, I suppose, from strategy into execution and action, which is what we do, Strategy. And so Ivan has already been introduced. I was very fortunate that I could bring him along today, because he's just in Southeast Asia yesterday and today. His first time in the region, although he's actually head of our whole global markets region, which is Asia Pacific plus Latin America. But I thought it'd be great to actually give a bit of a Latin American perspective. So from time to time, I'm going to hand over to Ivan, and he'll do like a sidebar, and then he'll hand back to me again. And we still have to keep within our half-hour time limit, though. So just thinking about trade in goods and services and what's been going on. Well, there's been a massive increase in trade over the past 30 years. I pulled these stats off the UNCTAD website, and it's very interesting to see a couple of things. First of all, there has been this enormous increase in flow, and secondly, the proportion of flow which comes from the developing economies is significantly increased relative to developed economies. So something very interesting has happened basically since I finished high school. The world is quite different now from the way it was sort of growing up in the 70s and 80s. And this is an example. I'm not sure whether you've seen this picture before. Certainly it popped up at the supply chain conference a few months ago, which Jonas talked about. But this is the Boeing 787, the new Dreamliner, which Boeing launched recently. And they've actually developed a completely global supply chain for manufacturing this aircraft. So it does actually get sort of finely assembled in America, but bits come from all over the world in order to do that. And people actually suggested that Boeing went a bit too far in terms of developing this extremely extended supply chain. And it resulted in a couple of issues. One was it took a lot longer than they expected to actually develop and test the aircraft in the first place. And the second is there were a couple of issues which popped up after commissioning, the most famous of which was the battery fires, which meant that they had to ground all the 787s for a few months last year until they figured out a solution to that problem. But we see in aerospace and aviation that the global supply chain is becoming truly incredibly global. When I was a child, growing up in the UK, Britain used to build aircraft. Basically we stopped building aircraft, but we still build lots of bits of aircraft. So if you want to fly in an Airbus, then you'll find that the wings are built in Britain, and then they are flown to the assembly plant either in France or in Germany, depending on which aircraft. The engines may or may not be built in Britain, the landing gear also. So there's lots of bits of the supply chain which happen there. But Britain has moved away from feeling that they have to manufacture complete aircraft and has focused on the bits that they do best. And I think that's one of the huge advantages of global trade, as anyone who studied economics would know, is that trade enables each country to focus on where they have comparative advantage and let other people do other things. And so we've seen that there have been a lot of trade agreements and also the plummeting cost of logistics over the past decades, which has resulted in a huge defragmentation of the globalized value chain. And that meant that it's become highly unusual now for a product to be manufactured just in one country. One of the things which was a bit surprising to me when I started looking at air freight in Southeast Asia was it actually turned my assumption about what was happening on its head when I looked at the actual flows. My assumption was that factories around the region would assemble sub-assemblies, and they would ship them off to another factory, and then they would gradually form into the finished product. And then the finished product, which has the most value, would be air freighted to the final customer. What I found was actually the complete opposite, that a lot of the air freight in the region is actually components going between factories because they have a very high value relative to their weight. And that quite often the final finished product will go by ship because it's relatively large and heavy compared to its value. So the value in terms of dollars per kilo was much lower for the finished product than it would be for some of the components. And one of the examples I found in Johor Bahru in the south here was Shimano, a Japanese manufacturer that makes bicycle gears and spokes and brakes and things out of very expensive metal alloys. And those are very expensive. In fact, they're often one of the most expensive parts of a bicycle. So when you see that, you say, okay, it makes sense that you would air freight parts of a bicycle like that because that's very high cost. The final bicycle, though, once you've assembled the wheels, the frame, everything else, becomes a much heavier item. So then you sea freight it. So logistics has actually changed quite significantly as well to enable factories in different parts of the world to be integrated into the supply chain. So now I want to do my first sidebar, is to actually hand over to Ivan, who's spent most of his career in South America, and just talk about what you've seen in terms of South American manufacturing.
Thank you. Okay. Thank you, Edward. Oh, indeed, some of these concepts, we showed the Boeing example, which could make us think, that this is something that only a sophisticated, industry or, a developed country has been practicing. But I could draw at least a couple of references, at least close to my country, which exemplify those concepts being applied throughout. First of all, in the same industry, Embraer, which produces essentially mid-size aircrafts, uses exactly the same concept, right? Notwithstanding it's based in Brazil, historically seen as a low-cost environment in an industry that is really driven by technology. They source their parts everywhere in the world, irrespective. It's not the basis of competition any longer or sufficient just to have low-cost labor. But perhaps more importantly for our economy regionally, I think the example that we see is the automotive industry, which over the years and taking advantage of the Mercosur trade agreement has actually developed a value chain across the so-called Southern Cone, Brazil, Argentina, Uruguay, in which different components of the manufacturers are produced in different factories that were previously pretty much destined to serve the local markets and now have gained a regional significance. So those are examples that the concept of value chain is not only expanding, but clearly taking now both global and regional roles.
Thanks, Ivan. Now, I have a true surprise speaker that even Paul doesn't know about, which is Liam sitting at the back. He's one of the staff in our Kuala Lumpur office. And he used to work in supply chain in automotive before he joined us. So maybe you just share a bit about your own experience of being in the supply chain.
Yeah, so do you want to come down?
You have to speak loudly, though.
Yeah, so I also have experience in the automotive industry, in the supply chain, and it's with Avada with working in tier 1, so working for OEM like Toyota or Nissan, and we were delivering automotive module based on built out of components, electronic components, and it was amazing to see where the different components were coming from and where the module was going at the end, because they were coming, so we were sourcing from about the whole world, which was from Southeast Asia, from Japan, and most of the components were coming also from inside Europe, because the assembly plant was based in Hungary, and components were coming from Romania, from Bulgaria, from other parts, and everything was assembled in one pan, and be able to manage all these elements and all those flow inside this assembly pen, and then after balancing this flow against where it's going to deliver at the end to the OEM, because the OEM, like the plants of the manufacturers, were in France, in Spain. And it's very interesting because at the end there were choices to be made, not only about saying we were trying to push to the low-cost countries, that's one thing, but we were considering all the costs, which were also the taxes, which were also the distribution logistic costs. And very important, and at the end, one of the key elements was to say most of the suppliers at the end, surprisingly, were more and more inside the European Union, because, and in low-cost country, meaning in Eastern Europe, rather than bringing the elements from the other part of the world. And that's where we started to think that why do we push everything to really low-cost country, while in fact there's so much advantage in the total cost of ownership by keeping the production more inside the region. And that's all this consideration we really faced in the automotive industry. So that's just the example I had to share.
Liam, thanks very much. So interesting, we've heard from Ivan and Liam, both of whom were talking about industries that kind of operated within a trade zone. So just like Jonas, I'm going to now take you back to some ancient history. So trade has been going on, pretty much forever, beyond recorded history. But until quite recently, it was all rather ad hoc. It happened. Ships travel backwards and forwards. You had to use media of exchange such as gold or silver. The Spanish silver dollar was very influential in this part of the world for many, many centuries. But there wasn't really a sort of overarching regulation at all. In fact, the first customs agreement as such was the Zollverein, which is German for customs agreement, or customs union, in 1834. So not that long ago relative to the history of civilization. And that was basically a precursor to Germany actually forming into a country. The little picture, the blue background, is a coal mine, and that's in a town called Essen in the west of Germany. I used to live there, and they built this coal mine, and they named it Zollverein because for them this customs union was such an important part of actually Germany developing itself as an industrial country that they decided to name this mine, which was a kind of showpiece mine in the 1930s after this customs union. So trade actually picked up a lot up until the First World War, beginning of the 20th century. But then, after that, there was 1930s, a huge amount of protectionism broke out, partly as a result of the Great Depression. And the US, for example, closed its barriers. I'm not sure if you can see these cartoons, but this is about the US tariff wall. And trade actually plummeted. 1930 to 32, there was a 61% drop in global trade volume. So a huge, huge drop. And things stayed kind of like that through the Second World War. And after the Second World War, people thought, we need to do something. We need to actually get trade moving. So GATT was set up in 1947. UNCTAD was set up in 1964. WTO actually rather recently, 1995 in its current form. So the second half of the 20th century is really about quite organized efforts to build up trade. And what we found is that a huge number of trade blocs have been developed around the world in all different parts. And in fact, there are very few countries these days which are not part of some trade bloc or other. I don't think there's anyone here from any country which is not part of a trade bloc. I looked to see if we had anybody from Mongolia here, but I didn't find anyone on the list. So basically, all of us are in some trade bloc or other. And these trade blocs have proven to be quite beneficial. Liam told a story earlier about sourcing things from Eastern Europe. And you see here the difference that it made when the Eastern European countries, first of all, were unshackled from the Soviet era sort of Iron Curtain. Clearly, communism, Iron Curtain style, was not good for trade. As you see, the very, very low growth rates that they had from 1980 to 1990. After the lifting of the Iron Curtain, 93 to 2003, there was actually quite a lot of trade growth, sort of unleashing an explosion of trade almost as these countries became integrated into the global economy. Then there's an even faster growth of trade once they joined the European Union. So you see enormous rates of growth, like Czech Republic, 15.6 annual average growth rate in the years after they joined the European Union. So clearly, joining the European Union for these countries was a very, very good thing in terms of trade. And the majority of their exports, 79%, were with other EU countries. And then, a number of small, but basically the rest of the world was pretty insignificant relative to that. We've also seen a lot of tensions that have resulted from trade blocs. So quite a lot of famous trade disputes, all of which actually involve the European Union. The banana trade war, which was essentially the Caribbean colonies linked to the European Union, or former colonies which were given preferential treatment. And it took 20 years before that was actually resolved. In 2012, finally, an agreement was signed to get rid of the preferential treatment for these Caribbean islands. And then there was the GMO dispute, the genetically modified foods. And in 2006, the WTO ruled that the European Union ban on importing genetically modified food was illegal. And likewise, the hormone beef dispute. Again, 97, WTO ruled against the EU. So this has caused some tension because countries are saying, well, if I sign up for a trade agreement, then what happens? Am I forced then to drop to the lowest common denominator of standards? Do I have to accept everybody else's stuff? So the US has decided that they're happy with genetically modified food. The Europeans have decided they're not, but they're not allowed to keep it out. What's the deal? And that has resulted in quite a lot of tensions. The other thing is that there's been a profusion of free trade agreements. So this diagram is produced by Peck. And you probably can't understand it very easily. That's the idea. It reflects the difficulty of actually understanding what's going on with free trade agreements in the Asia Pacific, where so many countries are linked in so many different ways. It actually creates nightmares for customs people because which country is something coming from, and if a product is actually originating from multiple countries at different stages of the supply chain, how do you handle it? So I think people have said, well, free trade agreements are good, let's have lots of them. And now we've ended up in a situation like this. So question mark, how to sort this out. I think it's that trade, you think about goods, but there are also services and there's also labor. So the question is, well, what people are allowed to do what in which countries? Can I, as a management consultant, freely go to other countries to do consulting? Or are there limits on what I can do? Can I freely go and work in another country, or do I need to get permission from that country? So there's a whole range from limited or very facilitated entry, so APEC, SAARC, all the way through to European Union, COMESA, where there's full labor mobility. So I'm British, as you perhaps can tell from my accent and my name. But when I reached my early 30s, I was offered a job in Germany. I could just go there. I didn't need to ask anybody for permission. I simply accepted the job and started work. No issue, because the European Union has said that there is free and full labor mobility. And that has led to some disputes as well. France, for example, had a rule that said that only French citizens can teach skiing on French mountains. And the European Union actually took France to court and said, no, sorry, but any European Union citizen should be allowed to teach skiing on a French mountain, so British or Dutch or anybody else from countries which are not traditionally countries where a lot of skiing happens, because we don't have mountains with snow, actually can teach skiing there as well. So that was something where the French resisted, but it came through. Interestingly, when the European Union expanded in the 90s and early 2000s, a lot of countries like Germany put restrictions on individuals coming to work. So they said, okay, Poland, you're part of the European Union, but there's a transition period where Polish people can't just come and take a job in Germany without getting a work permit. However, Polish companies could offer services in Germany. So what happened is that an entrepreneurial Pole would come to Germany and he would use his company registered in Poland in order to offer the work. And so essentially, the people came anyway, but they came offering services rather than offering labor. So a lot of things which are perhaps slightly unexpected when you enter into this. Another aspect of trade areas is currency. So there have been a number of different impacts on trade as a result of currency. The sterling area was more or less, I mean, it's rather informal because the way that Britain does things always is rather informal. But from 1931 to 1939, there was the sterling area, which happened when the pound sterling was delinked from the gold standard. And a lot of countries around the world, in fact, a huge number of countries around the world, linked themselves to sterling so that they had basically parity of exchange rates. And that continued to 1939. Then the Second World War broke out, and as a result, Britain decided to further tighten it. So it actually brought in a lot of exchange controls. And these exchange controls were not fully abolished until 1989. So I have an old passport at home where actually in the back it says, list of currencies. So when you went to buy currency in Britain when I was a child, you actually had to go and register with your passport to say that you had bought £50 of some foreign currency as part of the exchange controls. You didn't, though, need to register if you were buying another sterling block currency. So I could have bought Malaysian ringgit, which were part of that, without that, but I couldn't buy French francs or German marks without registering. So there's Bretton Woods. There's also the Plaza Accord, which was actually not a currency block as such, but it's an agreement to actually devalue the US dollar against other currencies. Result of that was that trade shifted quite dramatically and foreign direct investment shifted quite dramatically, as you're going to see on the next page. So this actually drove the Japanese yen up to very high levels. Japanese manufacturers then looked for other places to open factories so they could produce more cheaply. Malaysia was a huge beneficiary of investment at the time. And then the last one, the euro, was created and actually sort of came into form in the terms of actual tangible currency in 2002. I was living in Germany at the time. I had to go to a bank and change all of my Deutschmarks into euros. And all of these countries used a single currency, which meant that you no longer had any issues about exchange rate differentials or exchange rate risk when you're doing business with other countries in that region. So just on foreign direct investment, well, you can see here, and this is another UNCTAD set of statistics. They've got a great statistical website. You can see that foreign direct investment up until the 1980s was actually rather low globally relative to what it is now. 1985 was when, 86 was when the Plaza Accord came into being. And very quickly after that, there was a big uptick in FDI. So that then declined a little bit in the early 90s, but has since gone up tremendously. And I think the Plaza Accord was actually, in a sense, you could say, the origin of systematic FDI around the world. And what's happened is many countries have actually recognized that FDI is a good thing. It helps to boost your economy. And they've set up international promotion agencies to actually attract FDI. And I know one of your speakers is from MIDA. We actually did a project with MIDA a couple of years ago to help them to look at best practice, which MIDA actually does encapsulate in many ways, but what other people are doing around the world and how MIDA can further develop promotion. And one of the things that many countries struggle with is it's quite easy to do FDI promotion in order to attract new factories, manufacturing, assembly, those kinds of things. Where they struggle is actually attracting services industries, because it's much more difficult to establish, what is a service industry, how does it look like, when have I been successful in attracting something. When Strategy and set up in Malaysia, did Malaysia celebrate because there was a strategy consultancy here? Not really, because they could hardly see us. Nevertheless, we're making a positive impact on Malaysia's balance of payments because we're doing work in other countries and bringing the fees back here. So it's the kind of thing that Malaysia does actually want. So this is a list of the sorts of things which investment promotion agencies actually do to attract international FDI. So here too I wanted to hand over to Ivan and just talk a bit about, Ivan, if you will, the kind of FDI that you've been seeing in Latin America and how things have worked over there.
Yeah. No, I would say, I think it's worth mentioning a couple of examples in Latin America and perhaps another example here in Southeast Asia of importance. As you probably know, Brazil in particular in Latin America has been one of the leading economies that has received FDI over the last several years. I would not use Brazil, though, as an example, because I think the factors were much more related to the intrinsic of the local market than a concerted effort by promotion agencies to actually create the environment. I find that Chile, another country in our geography, is a much better example of a smaller local market that has created conditions in terms of currency flows, of promotion of setting up of new companies locally, creating infrastructure to support those companies, which actually has helped attract and develop the Chilean market to a great degree. But one of the examples that I think are quite impressive in this sense and comes here from the region is the work that I have witnessed being done by Singapore in terms of promoting foreign direct investors. I have been approached more than once by promotion agents from Singapore in terms of incenting us to set up offices in Singapore. And just recently, PwC has set a new growth market innovation center in Singapore, which I attribute quite a bit to having, of course, an environment that is very favorable, for investments and for activities related to intellectual capital development. So I think, countries are at different stage, and it's not just measured by the absolute number, but really how you can pull beyond your weight by actions of promotion agencies.
Thanks, Ivan. I think one of the risks that promotion agencies face is that they try and make coming to a country very attractive, and they often offer all sorts of incentives. So certainly in Malaysia, cheap energy, cheap labor, cheap land, cheap water, all sorts of things that are factors of production. The problem is that at some point you have to stop giving this. You can't give it forever. And so, as Ivan said, the intrinsics are actually very important. And even if the intrinsics aren't there on day one, you have to be working towards having the intrinsics there in the end. Otherwise, the investment won't be sustainable and it will disappear once the intrinsics have gone away. And I think, Jonas, you also mentioned some of the things which are very important in terms of not having corruption, having a good legal system which actually supports business in a country. So what are the future of trade agreements and trade? Well, there's actually a lot of political opposition to free trade agreements. Here in Malaysia, we've had demonstrations recently around the TPP, Trans-Pacific Partnership discussions, because people feel threatened, or groups of people feel threatened by the trade. Either they're saying, well, I think the view in Malaysia is that medicines would become very expensive because some of the cheap generic medicines here would no longer be permissible. In Japan, people are worried about the price of, or the subsidized, no, it's not subsidized, but supported rice, the subsidized rice farmers, and what would happen to them. So there's concern about all sorts of things which people are worried about when they contemplate free trade. And in the European at the moment, we've just had elections in the European Union, and what has happened is that a lot of Eurosceptic parties have done very well in those elections. So we're seeing perhaps a popular backlash against the tight integration of trade, services and labor within the European Union. In ASEAN, we are moving towards the ASEAN Economic Community. Here we see this huge gap, though, between stages of development in different countries in ASEAN, which actually adds a lot of challenges. So ASEAN is actually being rather cautious and slow in terms of the way it's moving forward with this, trying to reduce some of the restrictions, but not too quickly, and I think probably wisely. Interesting, if you step back and you say, well, when did the European Union start and where did it get to? And if you look at when the ASEAN started and where it's got to, then more or less they've taken the same number of years to get to the same point of their development. So I mentioned a Trans-Pacific Partnership, and this is an initiative which seems to be growing very fast at the moment, but hasn't actually quite generated anything real in terms of an agreement. Started with 4 countries, 14 countries now in there. A lot of countries like Malaysia are being very active in negotiations for this, which is going to be a pretty comprehensive free trade area covering both the eastern and western sides of the Pacific. Places like Malaysia saying, well, we need to get in fast because we need to define the TPP before it's signed. Otherwise, it'll be defined and then we'll be stuck with whatever's been agreed by the original people. So they've decided to move in fast and try and really push this. But there is quite a lot of popular opposition here and many other countries to this because people are worried, as I said, about the consequence of it. So future of trade, of free trade agreements, well, a lot of skepticism, but perhaps also some evidence. I showed you earlier the European Union impact on the accession countries, that free trade can have a big impact in terms of driving economic growth and development. So getting those right is going to be a big challenge moving forwards. Thank you very much.
I've been fortunate today. I haven't had to use my red card, green card, yellow. Like people have been very good in their supply chain management, delivering exactly what we need right at the time we need it, and then stopping. Okay, some interesting ideas there, and I think the interesting thing about having these colleagues, all 3 panelists actually, is we're looking a little bit beyond Asia. We're seeing things in other parts of the world. Greece, Europe, Latin America, kind of interesting there.